Hey, it's Carolyn Grimm, and I am here to give you an overview of nonprofit accounting. Let's dig into that. So, nonprofit accounting is very different from for-profit accounting, and there are some significant reasons for that. So, when we're talking about nonprofit accounting, what we're really talking about is the foundation of good nonprofit financial management. So, the accounting piece of it is what gives us the information that we need in order to provide good financial management for a nonprofit. So the nonprofit accounting piece of it is just one piece of the greater puzzle of running a financially sustainable nonprofit. Now, the reason that this matters so much is because in nonprofits, everything has to tie back to the mission of the nonprofit. Whether you are saving whales or you're providing childcare or you're making sure that kids get fed, everything that you're doing in a nonprofit has to tie back to that mission. And that means that the numbers have to support the mission. So the accounting is all about making sure we are doing things in a way that is bringing it back to that mission. So every dollar that comes in or goes out, it all needs to be related to that mission. When we're talking about for-profit accounting, we're talking about profitability. Is the company operating at a profit? And is it making a profit for the owners? Well, with nonprofits, they don't have owners. So what we're looking at instead is we're looking at accountability. So if I'm a donor to a nonprofit and I give you a check, your nonprofit has to use that check in a way that satisfies the mission. And if I say, hey, I want this to go for a particular program. I want this to go to the after-school program where you're teaching kids how to have better study skills or something. I may make it very specific to a program. So when we're talking about accountability, we are thinking about our donors, the people that are donating money, the government that's giving us money as a grant, or a foundation that's giving us a grant. We want to make sure that that money is being used in a way that's going to make those donors feel that we are doing things above board and as they were intended to be done. But the other part of the numbers, the accounting that's behind this, is that we're going to use those numbers to tell the story of what we're doing to our donors and our stakeholders. So our stakeholders might be members of the community. So we might be saying, okay, you donated money to us last year. This is what we did with it. These are the results that we got. We fed X number of children. We built this playground. We took care of 47,000, stray animals last year. We're going to use our financial numbers to tell that story so that our donors understand what we're doing with their money. So it all comes back to that accountability piece. And then on top of that, being transparent about what we're doing. So some of the differences between for-profit accounting and not-for-profit accounting. We've already mentioned that one of the big differences is that for-profit businesses are profit-driven and nonprofits are mission driven. So we are trying to do some big thing, solve a problem, make life better for someone. And another difference is where the money comes from. So if you're a for-profit business, you're selling something to your customers. So you're selling pet sitting services or you're selling accounting services. With nonprofits, those funds are different. They're coming from donors or grants. So that's a whole different ballgame as far as how the money comes in to a nonprofit. When we're talking about financial reporting, on the for-profit side, we're talking about creating financial statements that are going to show whether we're making a profit and whether the owner's investment in that company is making them money or not. Well, when it comes to nonprofits, it's all about accountability and transparency. So we're going to have similar financial reports, but behind the scenes, there's more that's going on than with a straightforward, we're trying to make a profit this year kind of business. The other thing that comes into play with nonprofits is we have restrictions oftentimes on how we can use our funds. So I mentioned if I donated to a nonprofit and said, I want this to go to a particular program. I want this to help build a playground, or I want this to go for those art classes for kids. So it's really important for nonprofits to keep track of those funds, whether they're restricted and can only be used for certain things, or they're unrestricted and we can use them for our payroll or for our rent. So it's really important that in nonprofit accounting, we are keeping track of whether funds are restricted or unrestricted. So in nonprofits, it's all about accountability. It's not about profitability. It's about accountability, which means that we need to be thinking in terms of compliance with what donors are telling us they want us to do. And we're also being stewards of those resources. So if your nonprofit is a land trust, and that land trust, part of what they're doing, making sure that the land is being well taken care of, that it's being used appropriately based on what our donors wanted us to do. So it's about stewardship, about taking care of what we have so that we are tying that back to our mission. Part of being accountable is making sure that we're being transparent. So for example, nonprofits have to provide a copy of their Form 990, which is their tax return, because yes, nonprofits file tax returns. We have to make that available to anybody that requests it. So a lot of times you'll see on a nonprofit's website that there is access there to their 990. That's part of being transparent, saying this is how much money we brought in, this is how much money we're paying our staff, this is how much money we spent on our programs. So that's part of the transparency, is making sure people can access the information and that we're being above board about how we're using those funds. Another part of the accountability piece is making sure that we are living up to the expectations of our donors and our grantors. So let's say we get a grant from a foundation and it's to build a playground. And the grantor is expecting that we will build a playground. And if we run into a problem building that playground, the grantor is expecting us to communicate with them and let them know what's going on, what's happened that's holding this project back. Because this is money that has been donated by the grantor for a specific purpose. We can't use it for anything else. That is a restricted funds issue. We can't just willy-nilly spend it on something else. So it all has to come back to making sure that we are accountable for those funds. Now, the way that we track those funds is we use something called fund accounting. You can think about fund accounting like a series of buckets. So we get a grant, and that grant is for our playground. So we're going to take those funds and we're going to put it in our accounting system in this bucket called playground. And then the only thing that can come out of that bucket are the expenses that go along with that playground. So we can't use those funds for anything else. So fund accounting is keeping track of things in those buckets and making sure that the only expenses that are coming out of those funds are for that particular project, program, or grant. This is part of what allows us to make sure that we're being accountable and transparent and meeting the expectations of our donors. The other thing that fund accounting is going to allow us to do is we're going to be able to see how much is left in that fund. So how much is left in our playground fund that we can still spend on putting that playground in. So fund accounting allows us to basically run a profit and loss statement where we're showing what the income was that came in, what the expenses have been so far. But in a for-profit business, we would be trying to make sure the number at the bottom, the profit, is as high as possible. So we would be cutting our expenses or raising our prices. But in nonprofits, the idea is that you will spend the money based on the budget that you gave the grantor. And at the end, you're not going to have anything left, and anything that is left may need to go back to the grantor. So I mentioned that the financial reports that a for-profit and a nonprofit run are similar, a little bit different, but they're basically the same idea. We've got a statement of financial position for our nonprofit, which is called, in a for-profit, a balance sheet. It's going to show assets and liabilities and equity But for a nonprofit, rather than equity, because that's ownership, we're going to call that net assets. This is what's left over after we take our assets minus our liabilities. Now, a lot of times nonprofits will call this a balance sheet, but the official term is statement of financial position. We also are going to have an income statement. Income statement for a for-profit business says revenue minus expenses equals net income or profit. For our nonprofit, it's going to be called a statement of activities, where we're going to show our revenue and our expenses and what's left over. Again, you'll often hear nonprofits call this an income statement or even a profit and loss statement if they're from the for-profit world, but the official term is statement of activities. Now, for nonprofits, we're going to have an additional financial report called the statement of functional expenses. And what this is going to do is it's going to divide our expenses up into program expenses, like the money that we're expended for our child care program, administrative, the money that we're spending for our executive director that isn't part of program expenses, for things like insurance, for office rent, and then fundraising costs. How much money are we spending in order to raise funds for the nonprofit? So we're going to separate those things out in a statement of functional expenses. And then the final one is the statement of cash flows. It's the statement of cash flows, whether it's a for-profit or a nonprofit business. We are talking about where does the cash come from and where does it go. That's the same. We're going to look at operating, investing, and financing activities just like we do in a for-profit business. So all of those pieces together help us to build trust. And that is a huge piece of what we do in the nonprofit world. We want to make sure that we are giving regular and clear reporting to our stakeholders, whether they're board members or community members or donors. We want to make sure that we have strong internal controls, things like who is going to handle cash when it comes in, who's going to sign checks, who's going to take deposits to the bank. Those are all part of the accountability and transparency that we have to adhere to in a nonprofit. And then the biggest thing is that we need to make sure that our financial management ties to our mission goals. Our financial management ties to our mission goals. So every dollar that comes in, every dollar that goes out has to tie back to our mission. How is this helping us to achieve our mission? Okay, so key takeaways for this video. Nonprofit accounting focuses on accountability and transparency. Fund accounting is how we make sure that we are doing what our donors expect of us. And when we've got those good practices in place, it contributes to the financial health and the trust that people have in our organization.